What's up, money lovers? Welcome back. So I did end up selling two stocks and buying one new one. We're going to go over today what the two stocks I sold were and why, and what stock I bought. So let's get right into it. Alright, so the two stocks I sold and what I used the money to buy. I sold off my Scotts Miracle-Gro position as well as my IBM position, and I put most of that money into my newest position, Google or Alphabet. And I do still believe in both of those companies, but I just saw an opportunity here that I had to take advantage of. Because when you just compare Google, these companies are not on the same playing field. Obviously, Google and Scotts Miracle-Gro do two entirely different things. Scotts Miracle-Gro sells dirt, Google sells the future. IBM and Google you could compare a little bit more fairly, but so Scotts Miracle-Gro, they just gave their quarterly report, and I did not think it was a very good or reassuring call. They basically forecasted maybe 4% growth at the best case scenario, and worst case scenario, a flat line or negative 4% growth, accompanied with their cannabis section of the business, which sales declined a lot. They're down 38%, and they basically are saying it's going to be a rocky road. They still think it'll pan out in the long run, but it's going to be very volatile, and there's issues with oversupply, and they're even considering possibly spinning off the cannabis segment, Hawthorne, that segment of the business. And I'm just thinking to myself, then I would own a pure play cannabis stock, which I have no interest in. I just saw it as like a bonus on top of this sound blue chip business model of Scotts Miracle-Gro. They have a stable business but it really just didn't sound good. So like I said, possibility for negative 4% growth over the next year. IBM, meanwhile, in their earnings report, gave guidance of maybe mid-single-digit % growth each year. That's their goal. So at that point, you might as well just be investing in the S&P 500. Google, on the other hand, just grew 42% in one quarter in their Q4 of 2021 over Q4 2020. And, this company I've been wanting to get into for a very long time, and, we'll go through some of the reasons why here. I thought this would be a good opportunity. So let's just compare these companies a little bit, and then I'll get into some more of my reasoning of why I think this is the best move for me. If I was at a different point in my investing career, it might make sense to have companies like Scotts Miracle-Gro, IBM, but since I'm young, I should be focused most on growth. And where better to get growth than from a company like Google, which at the end of the day is all in one. It's a value play, it's a growth company, it's a blue chip stock. They may even start paying a small dividend. So to me, it's almost like Google has the best chances for success here, or the most growth possible. You might say, even though Google is rapidly approaching a $2 trillion market cap, you could make the argument, yes, it'll be harder for Google to double than a Scotts or an IBM, when Scotts market cap's only $7 billion, IBM is $123 billion. But at the same time, financials here paint a different picture, and you let me know if you think I'm right. Because if we look at the financials here, obviously Google is a massive company, bringing in $240 billion in revenue in the last 12 months, and half of that gross profit, $135 billion. I mean, no one can compete with this. Operating income, $72 billion, of which they put $30 billion back into R&D. If we just compare that with IBM, obviously bringing in much less revenue, only $30 billion gross profit, and then only $5 billion in operating income. They put $6.5 billion into R&D. So who's going to maintain the lead, Google or IBM? I mean, it's going to be very difficult for IBM to catch up, because right now everyone would rather work at Google. Google is building the future. They're a much bigger company, and they have much more cash at their disposal. So Google right now, you could argue, is the best, when compared to IBM, has the best talent. It's the biggest. They can do the most because they have the most money. They have the most free cash flow. And I said if I was going to add a new technology company, that I had to get rid of another one, because I don't want to be overexposed to, technology stocks. So I figured of all the big tech stocks I own, Tesla, Apple, Facebook, Microsoft, IBM, I had to pick one. Which one do I think has the least bright future ahead? And that was IBM of that bunch. So again, nothing fundamentally changed with any of these three companies. I just think Google is the most promising story right now. And like I started saying before, it might take longer for Google's stock to double. And you could make the argument, well, Scotts Miracle-Gro was already, basically double where it sits right now. It just needs to get back to its all-time high. Shouldn't that be easier? But I almost feel like there's more risk in that approach, because there's a lot of things that can go wrong in the Scotts Miracle-Gro story, which have been going wrong. As you can see over the past year, it's not a pretty chart here, and there's a reason for it to lose 50% of its valuation. Whereas with Google, they've got everything going for them. They're so secure and stable. I mean, you're getting so many benefits here because you're investing in a blue chip. They're a company with one of the best balance sheets, have some of the greatest profit margins. So even though Google may not double in the next year or two, you can definitely expect it's going to keep growing. I mean, over the past year, it was up 43%. I mean, you can definitely expect each year Google's market cap will continue to go up, and their growth should continue at a much higher rate than the likes of Scott's and IBM. Another thing that's very interesting, one of the investors who I've been following lately, Terry Smith, he's an English chap, very good investor, and his whole investment philosophy is built on buying these businesses that have the best return on invested capital. And you can make the argument for Google. He actually just happened to buy Google. He's been outperforming the markets for a very long time. I'm pretty sure maybe from the period of 2010 to 2020, if the stock market gained around 183%, Terry Smith's fund, I think, was up 438% or something like that. Look that up. So he's definitely been outperforming the market, and he seems to have this philosophy that makes perfect sense. Just that the companies that are best able to get the highest return on invested capital, companies like Google have huge profit margins, and over the long term, periods of 5, 10 years or decades, these companies will perform the best, and it makes sense. And Google's growth could slow down. It could go down. Who knows? Maybe it will only be 10 or 20% next year. But I see Google having a higher growth rate than Scotts Miracle-Gro and IBM, especially consistently over a period of years. Now, there might be higher risk, higher reward with a play like Scotts Miracle-Gro, but at this point, I'd almost rather just be in this slow and steady, nothing is guaranteed, but more surefire way of getting there with Google. I talked about some interesting things with Google in the last video, which I'll link in the description below. With Google, you even get a small exposure to SpaceX because Google has invested into SpaceX. There's a lot this company has to offer. Google is not going anywhere, even though the majority of their revenue is rooted in the search engine. I mean, let's be real, at the end of the day, you're using Google. What are you going to do? Go use Bing? Is that even still around? Google has a monopoly, and they're doing so many other awesome things too. So let me know what you think in the comments below. Do you agree? Why or why not? If you enjoyed the video, don't forget to like, subscribe, and drop me a comment below. This is Vinny from the Investment Club, and I'll see you next time.